Rohr here with an early global view on Monday, November 24th, 2014. It's currently 7 a.m. Central Time. And before we get to anything else, as an important reminder, with the U.S. Thanksgiving holiday on Thursday, all of the end-of-month U.S. data, including weekly jobless claims, gets jammed into Wednesday, even though there's quite a bit of additional important data from other centers as we go through Thursday and Friday, with the U.S. mostly closed. So what does all this mean to the markets? And here we classically have the U.S. short-term charts for the S&P 500, hourly on the left, 30-minute on the right, and we saw the massive gap higher off of what Mr. Draghi had to say, and especially that Chinese central bank rate cut on Friday. But even at that, the top end of the topping line and weekly oscillator resistance that was in about the 2,055 to 65 range, the market traded above it, pardon me, but couldn't remain above it for very long. Look at how quickly it was back below that topping line on the weekly chart at 2065. Now, it's currently up 5 today, up at 2067, but the problem for the bulls is that that topping line's up to 2070. I'm giving a fine line reading on the oscillator. It's not really $10 below that anymore. The 41-week average playing a bit of catch-up, so the oscillator resistance is actually going to be about 2063. So the market's up playing around with a very critical zone. And it's going to be interesting to see whether it can escape 2070, which for practical purposes now would mean escaping the 2072.5 high from Friday. And if it for some reason can't escape 2070, it might be vulnerable again. And one thing